Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 25th COT report of this year, and as usual we're going to start off with the changes in commercials positions. Here we go. New Zealand dollar on top of our list with a huge 52% change in commercials positions, 54 in large speculators, unquestionably the largest change in the past 52 weeks. So huge change over there. Of course it is a bearish COT change signal. The magnitude of the change in traders' positions was humongous. So the change signal signals us a move downwards in the upcoming few days. Jumping to the 5 years chart, you can see that we have, with this large change in traders' positions, we suddenly reached a 214 report extreme in case of commercials. So that's somewhere over there. And 213 in case of large speculators. Huge a change, and with that change we've reached suddenly a significant extreme. Both of our signals, the COT change and the COT extreme, are pointing downwards, which is actually a good signal coming at this point in time, so at this this resistance level that we're at right now. So the report definitely is suggesting a move downwards. In short term, the COT change signal, and medium to long term, the COT extreme, which of course, as you may see, has plenty of space left to reach even greater levels. Of course, with such a dynamic movement in traders' positions, that might actually happen in the next couple of weeks. Let's move on and have a look at the dollar index, where we have a 44% change. In commercials positions, 44 in large speculators also. Again, we're talking about a huge change size, possibly the largest in the past 52 weeks range. Though there's one similar to this one, but it was an opposite signal. It was actually a bearish COT change signal. You can see that it wasn't actually an effective one. So that's a good warning sign for any of you who are just new to these COT reviews and COT analysis, that these change signals very often help us in trading, but sometimes the signal is not effective, and that was the case back over here. So now we have a bullish COT change signal telling us that the dollar index can move a bit higher in the next few days. Jumping to the 5 years chart, you can see that we're getting closer and closer to a bullish COT extreme level. So the bearish one, the most bearish one, was back over here in 2015. Was actually a top. Prices did go a bit deeper, but never eventually broke the uptrend. So we're still seeing a rise in the dollar index, and after this decline that started around the end of last year, early this year, we have reached a bullish extreme. The Chicago wheat is our next market, with a 40% change in commercial positions. This, as you may see on the 52 weeks time range, is the largest change in commercials positions, and it's the largest in large speculators. The last time we had a similar change size was back over here, and you can see that was an effective signal coming at this top, and then eventually prices broke down. Jumping to the 5 years chart, here we go. You can see that we're moving towards a bearish COT extreme level. As prices are going higher and higher. You may also see that the last major extreme was a bullish one, and that was actually a good signal. Since then, prices have gone much higher. Let's jump over to large speculator COT extreme. We have the sugar market on top of our list with a 513 report extreme in large speculators, and 527 report extreme in commercials positions. So that is an unquestionable bullish COT extreme, a huge one, very large. We're talking about almost 10 years since traders were at such net levels. Of course, we're not surprised to see that after a significant decline in prices. This extreme, of course, may widen to even greater extent. So that's a warning for any of you who just got into it and see this signal in sugar market. Before you enter long, patience, and of course more technical analysis for determining the exact best location, of course, risk management, money management, and so on and so on. So we're only talking about the COT analysis here, and that just says, hey, stress levels have built up to an extreme that we haven't seen for 10 years now, basically. The Kansas City wheat is our next market with a 335 report extreme. Let's jump to the 5 years chart. Here we go. So it is, of course, a pretty visible extreme, a large one. We're talking about roughly 6.5 years extreme. This is a bearish one, and we're expecting prices to go down. Of course, we talked about the Chicago wheat when analyzing the COT change signal, and the picture is somewhat similar to that. And last but not least, we've got the rough rice with a 299 report extreme in large speculators positions, 165 in commercials. And again, this is a bearish extreme. Of course, we're not surprised, since these grains do correlate with each other pretty significantly. So we have a pretty decent rise in prices in the past few weeks, in rough rice. And that's the reason why I'm not surprised to see such an extreme. And this may be a good signal for the end of this rally. We may see a bit of a decline, and possibly prices going down to this support level that you can see. Prices have bounced back towards higher levels many times in the past couple of years. Okay, that is going to be all for this review. Don't forget, you can look at other COT charts on our COT charts page. A more in-depth and detailed COT analysis can be available here. And of course, other great functions are accessible at cotbase.com for your COT analysis. I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.